Well, good evening, everyone. We are here for our weekly training call. This is our weekly stuff. I'm gonna get my camera together. There we go. Weekly call, see what we can learn today. I wanted to share with you a credit spread. I wanted to do like a trade recap and talk about like all the steps leading up and through the trade. So that way we can see where we can make some adjustments and alterations even to our own trading, right? But I first want to hear if there's something you all want to share, what kind of things we've had in our trading, what kind of success, not success, what are our lessons, what are our things, what do we have that we can share? Anybody want to share a lesson, share um a positive? We like celebrations too, wins and lessons. Anybody? The floor is yours. I have some, but I want to let y'all talk. Nobody has a lesson or nobody has a win they want to share?
Well, I'll say I didn't. Although I did not trade today, I will say I realized I decided today after you remember we were trying to get the toolbars.
Yeah, I still didn't get them
So
right, by the way.
okay, I was nice you called them. I realized like we got a lot of value in knowing our brokerage a little bit more. In other words, I'm have to do a deep dive into Thinkorswim to see like what else is available that can help us be more efficient.
Yeah.
With our trading because I started finding other little stuff and I'm like, wait a minute, we could use this to do that and get us
Mhm.
into some trades faster or get us charting more efficiently. So
Right.
if anything, I would say the lesson from that was just uh, be eager to continue to add knowledge because
Yeah.
the brokerage itself, like your app, knowing your app is also part of being a successful trader.
That's true.
Because like right now, if you ask me to place a trade on Thinkorswim on my cell phone, it wouldn't get placed.
I'm gonna tell you, I
I
went
do the
from the
desktop.
app the day that Thinkorswim wasn't working. What was that, Tuesday? I moved over to the Thinkorswim on the desktop. Like I went to the web page, Thinkorswim. It looks different. I managed it,
Yeah,
but after I was done managing and pushing buttons and going, I had a trade idea that I thought I wanted to do, but then after that, I was like, I don't even have the
yeah,
motivation to do that.
yeah,
I'm just waiting till my app work right. So you're
exactly.
right, just knowing a different way to get where you wanted to go. Definitely, I did not feel comfortable manipulating that system. I did not feel comfortable.
Yeah, there's no way. But I will also say along that same line though,
Mhm.
when people are asking, like, what brokerage should I get? What I'm doing now is, even though I know everybody's gonna say which one they like,
Mm.
my suggestion now is going to be, what device do you like to use the most?
Okay.
And based on the device you like to use, find a brokerage that matches that.
Yeah, that makes sense.
So in other words, I'm not going to send you to I'm not going to send you. I mean, I'm not knocking Trade Station, but I'm not I'm not going to send you to Trade Station. I know, right? I'm not going to send you to Trade Station if I know that you let's say use a Mac because their version, they don't have a version of that works well with Mac.
Mhm.
But if you have a Mac versus a Windows, I'm going to say Thinkorswim makes more sense for you.
Oh,
Because I know that it works on both devices. If you do tablets, somebody else might not work on that. But
right.
even though it helps to learn the other platforms, which regardless of the one you're using, the one that you feel the most comfortable with is cool.
Right.
But I would say, even if you know whatever, let's say I only do desktop, but I also know the web.
Mm.
To me, the web is like the safest backup
Yeah, it is. I agree with
because
that.
because it is closest. It is kind of, it's almost like they kind of mix it between the other ones. But so to me, that was the lesson, is the importance of the platforms and being able to navigate them.
I agree with that. Totally, totally, totally.
Yeah,
Anybody else want to share something? Janae?
I do take the trainings that they offer for trade stations just so I can stay abreast of, like you said, the different things so that I could just, know my platform much better.
Mhm.
I did enter SPX yesterday after
Okay.
Powell. So
Okay, so did you do it in your live or your sim?
I was live.
Oh, so you didn't get clapped, did you?
Nah, she don't get clapped. Let me stop.
Oh.
Nah, yeah, I
Sweet.
mean, taking that chance, I knew, and just like how I knew it would kind of ride up today, ride up yesterday and fall today. Yeah. But here's the thing. I think we only have like how many more times before Powell for the rest of the year? Because I've been learning Powell for the last couple of months in
Okay,
terms of how. So that was why I felt like I could, and I wasn't
okay,
close. I wasn't froggy.
okay,
So
cool. Cool, because what basically it ran up there after him and then fell off a cliff. That like 315 candle was crazy. I think it was like 315. Then it hit the bottom and came up just a little bit, but it was a lot of movement that last hour.
yeah, these
Okay.
last couple months, these last couple of weeks, before Nvidia, yeah, just earnings. Yeah, that 3 o'clock hour has been definitely more volatile than usual.
Yeah, yeah, for sure. Anybody else got anything they want to share?
I was successful this week. Well, we'll see how Amazon close because it's close. I'm feeling the fire, but I got
You
it
feel
Amazon today. Right. I had gotten out of everything yet this morning.
okay.
And then I hopped in, yesterday morning. Then I hopped in Amazon today. So
Okay.
we'll see.
You hopped in it on what side? The call credit spread or put credit spread side?
No, put.
And then it dropped like it did today. You still say
Yes, because it was going up. It was going up.
it was.
And then it just dropped. I'm okay right now, so we'll
Okay.
see. I'm gonna try to close it as soon as
One
first
thing I
thing in
was
the
thinking
morning.
is when it started dropping, you probably should have went ahead and got you a call credit spread while it was dropping. That way you could have pulled in that money too. Probably didn't think about it.
I did think about it, but I wasn't feeling froggy.
I thought about it, but that's all I did was thought about it. All righty. All righty. I'm gonna run these charts and then y'all let me run through the charts and then I'll ask questions at the end. So hold your questions to the end. I want to be able to record this and have it edited. Now that my editor has been found, he was in the lost and found, and now he's found. I'd like to have my editor to edit it and put it on YouTube.
Alyssa, did you do your wins and lessons?
I did not, but I can. My wins and lessons this week, I had a couple of them. I'm going to talk about this Uber trade, which was one of my wins. I also have been practicing the strap more. And oh, by the way, I spent 3 days solid in the sim. What? I was in the sim for 3 days and I wasn't
What?
pressed. Yeah, I know, right? This is like miracles on miracles. Yeah, the little miracles. You can count all the miracles. The other thing that's going on is Triple Q, my Peakbot everyday Triple Q is renting and repeating every day. That's been positively profitable each day. Yesterday, I think that one got breached, but the bot entered the next day or entered for today, and it pulled in enough money to basically supersede what was lost on that one. So that's happening every day. Speaking of Peakbot, if you have Peakbot and you're running it with Schwab, you have to go every single week. I do it on Thursdays. You have to go disconnect and reconnect Schwab every week because their API is only lasting for 1 week, which is crazy. But every Thursday, I go and into Peakbot, I disconnect it and then basically reconnect the broker. So that way it can continue to do its thing. And it has to be, your API only lasts 1 week. So that's what you have to remember to do that. If you're working with Peakbot, you have to reconnect your API every week. Okay. So those two were positives. I had my lessons though, last week I had Amazon and I had an iron condor on Amazon. Lesson number 1, Amazon is not iron condor-y per se, because when it starts moving, it definitely gets moving. So I had that. I decided to roll it to this week. So I rolled it to this week so that way, and then I rolled it and kind of widened the spread a little bit. And one side ended up being very profitable. You know, it went the put credit spread side, because of course the upwards side is still moving, was still moving. It was still going up when I got out of the put credit spread side. And then today the call, it started falling. So my call credit spread, I ended up just closing it because I didn't want to go into tomorrow believing that Amazon is going to pick up and run again. I just bought my way out today. I think I spent $100 to buy my way out because it was a 2.5 spread. I felt like that was worth the peace of mind, right? So there's that one. My also other lesson is Abercrombie and Fitch. I had some credit spreads on Abercrombie and Fitch last week that I rolled to this week. Abercrombie and Fitch, the bid ask spread is so wide that when you try to get out, you cannot. The numbers keep dancing. Like one thing, it'll say it's worth $70. And then in the next few seconds, it'll be worth 120. And then it'll bounce back to 87. Then it bounces up to 130. Then it bounces back to 70. So I decided Abercrombie and Fitch, me and you ain't doing, and I don't really like it enough to be fooling up with it. So I went ahead and closed Abercrombie and Fitch as well.
I felt that way about Crowd when I was telling you.
Yeah.
It looked
I remember
good,
you
like
saying
good
that.
premiums, but them premiums were disappearing.
Yeah.
I don't got time for no disappearing premiums.
So I was trying to get out. I was trying to buy my way out, and I put in 72. Then it jumped to 120. Then it jumped back to 150. Then it was just, I said, finally, whatever it got to where it sat still enough, I went ahead and closed it to say, this is foolery. So that's what my lesson is. Abercrombie and Fitch is not for me. And then the rolling, I'm not a huge fan of rolling. Honestly, for the extra effort I went through to roll it, I should have just closed it. And it would have been off my slate, off my thing. But I have to say though, I am at a Friday and I'm coming into Friday and I think I have only 3 or 4 trades open for tomorrow. I don't have anywhere near as many open as I would normally have on a Friday. And that's a good feeling because generally Fridays then feel very haggard and I don't go into the weekend like comfortable. I have to, that was the other thing I was doing this week was learning how to, I put myself on what I'm calling an only me trade, an only me trading plan. And that trading plan for me is, I will only enter trades that I have taken the time to go through the steps and make sure that I fully agree with the trade. It'll be an only me. So that way, when it goes right or don't go so right, I won't have nobody to talk to or blame, but only me. So those were my lessons and wins. All right. Let's share my screen. Let me move us out of the way. Let me move this out the way. All righty. So credit spreads from entry to exit. We're going to do a trade recap from this week. So what we do, well, okay, let's go through my slides. Topics, the chart. We're going to talk about support and resistance, the strikes, setting up the alerts, entering the trade, and exiting the trade. That's all the things we need, right? We need to have the chart, the strikes that we pick, set up the alerts, which the set up the alerts is the part that we really hadn't done up till now. Entering and exiting, we've talked about those things. So on Sundays live at 5, I charted Uber. Uber showed up on our, I can actually put it here. Uber showed up on our option seller trade list. All right, it showed up as an iron condor based on it being neutral on the Peakbot watch list. It came up as neutral. So I looked at the chart to see what was called credit spreads, area put credit spread, right? So these are the strikes that I gave you from the same ones on the graphic, but I charted it out to say, do we want 72? Probably could go up a little bit higher, up to 73, up here for this resistance. This base kind of was based on back here, 72.65. But I said a call credit spread at or above 72 and a put credit spread at or below 66. All right. So, we got a gap here that was it was all of this gap from these 2 days, but price action had filled the majority of the gap, and this is all that was left. So what I did though, I set up, after I got our support resistance, got our strike, got our thoughts, yada, yada, I then went to the chart to set up the alerts. All right, this is how we set up alerts. On the chart, I'm going to switch to the chart soon. On the chart, you're going to right click, select create alert, which I'm sure there are people who already know this, but I'm just walking through the steps for those who may not. On the chart, right click, select create alert, where the price says mark. You want to pick at or above. It's got a little spot there, at or above, for your call credit spread alert. Input your resistance price, right? You input your resistance price. And then write in your note, CCS entry at blank. Okay, I think I might have put 72 in here as your note. Then pick at or below 67.3 was what was the support area. Input the support price and then write in the note PCS entry at 66 strike. So what happened was, after I put these alerts in, basically saying there's support, there's resistance, these are the areas I want the chart to now alert me, and then it gave me a note so that I would know why I had the alert coming, like what are you alerting me for? I have that. And then I could use that note to make the move when the time came. When the time came, I could use that alert to enter my trades. So this is what actually happened. Let me share the screen because I didn't share yet. I pushed the button and didn't push the other one. There we go. So on Monday, the put credit spread alert got triggered. I believe I put a message or something in the chat that said that the put credit spread alert for Uber was triggered. So I sold the 65.66 put credit spread and I collected $21. As soon as I entered that trade, the price began to move up because it was at support. So it moved on up from support. That was good to see. Like it almost got to like 60% of the profits by the end of the day. And I was like, I didn't really want to use a day trade. So I let it go to the next day. But on Tuesday morning, I set the closing order. And then I bought to close for $10. I put the closing order in for $10. I bought to close for 10. It means I kept $11 profit, right? On Wednesday, because price ran up from that support and we were in a kind of tight zone for Uber, on Wednesday, the call credit spread alert triggered. It triggered and said, we at the call credit spread. So then I looked, 72 was a little too close. It had already like passed into 72 and I was like, I'm not going for 72. So I went up to 73. Honestly, you could have done 74, but I felt like because we were at resistance, 73 was going to be fine. So I did 73, 74. I believe I put that into the chat and told everybody that that's where we were, right? 73, 74. Call credit spread, I collected $25. I believe if you had done the next one up, you probably would have collected like 15, 18 or 15, something like that. And then Thursday, I set the closing order for that side and it closed. So I bought to close for $10 on Thursday, which was today. I kept $15 in profit. So in total, I collected $26 in profit using the $100 of collateral. Rich, 26% ROC, return on collateral. 26% return on collateral. I'm trying to get Thinkorswim open so I can show you on the chart. If you've got questions, go ahead and ask them while I get Thinkorswim open. It's just taking its penny time. I think what's different, what felt different in the past, what we've done is, I know I have, I'll say we, me. What I've done is, at the time that I wanted to enter the trade, I just went in at that time. So if I said, you know, it's 10 o'clock, 11 o'clock, I'm ready to look, I would just go ahead and look, and then I would enter the trade. So the proximity to support or resistance wasn't something that I really actively looked at. I would say, yeah, it's in between these two, but I didn't actively wait for it to get to resistance or come down to support. I just was like, okay, you know, I basically entered the trades when I was ready to enter the trades, not when the trade was necessarily ready to be entered. Now, the difference turned out to be that when I entered the put credit spread, I was able to collect $21. Generally, when I was entering on the, you know, in my trades, I was getting maybe 10, 12, 15 at the most dollars, because it wasn't in proximity to the support. Same thing as when I got to the call credit spread side, I was able to collect $25 on the call credit spread side because I was in close proximity to the resistance. So if I had done it when I was thinking about doing it, I probably would not have collected the same amounts of money. So waiting until it got to support and resistance, I believe, made a difference for how much premiums I could take in. Does that make sense? Thinkorswim is now open. I just got to get to the Uber chart. Tell me how you all do it when you're entering credit spreads. Are you using something to help you help you enter when it's at support or at resistance, or are you doing it when the time feels right for you too?
I tried to do mine. So I'm gonna do my put credit spread. I try to do it when it looks like it's definitely leaving that area.
Mm-hmm.
Sometimes, like I realized that I probably could get in sooner.
Mm-hmm.
I just don't always realize it. Although I could have got in, got in a little bit sooner. But I try to do it where it's like making sure that it's leaving, but it's not in the middle where there are lower premiums.
Mm-hmm.
The other thing is, once I know that it looks like it's leaving the zone, whether it's the put credit spread or call credit spread, what I definitely do is try to wait until I see a pullback. So in other words, if I see that it's going up, I'm like, okay, it's leaving. If it looks like it's going to pull back but not reverse, then I'm like, okay, because sometimes during the day, especially on the, I would say on the 15-minute, you can see where it's fluctuating in between those zones. And so sometimes, depending on what you're trading, as it looks like it's fluctuating back towards you, that's the time to get in, like you were just saying. So I try to look at it from that direction too. It's like even though it's fluctuating, like in other words, I don't have to get close to the price unnecessarily.
Right. Okay.
Because I can still get under support where I want to be, and just wait till it comes back my way a little bit. And now if it's just dropping, that's one thing. But if it's like moving up and down in like a channel kind of situation, I'll look for that, and then I'll enter when I can see that I feel more confident with that. Does that make sense?
Yeah, it does make sense. So this is Monday. So what you're looking at in the middle here is Monday, right? So this is the 15-minute chart. And we started off the day, it's kind of dancing around. I had an alert here that said if it got down below 67 or 67.50, I think I might have had the alert. If it got below there, to let me know. So now this price dropped way down into the zone. Actually, this went down as low as 66.57. Now, what happened in the middle of the day to drop this price like this and then bring it right back up, I don't even know. I just know that the alert triggered. So then I went to look at it and I decided to do the 65.66 entry here, 65, because that was, still below this. I probably could have got 66.67, but sometimes it ain't always good to be froggy. But I did 65.66, again, collected my $21, and then price went back up. See how price went back up and kind of hovered around in the 68.50 zone. And then the next day, it did fall back down in here again, but because this little piece here, or it might have been later in the day, that it had done some little movement here and then went on up, then that put credit spread was able to close. I was able to close the put credit spread as the price went on up, because this was still 67.26 was still support. So it just bounced here, got a couple of, if we put on a little line here, a couple of touches to the 67 and some change, right? And then it went on up above there and kept on going. So then Wednesday, notice how price is going up, up, up. This was Tuesday right there, the end of Tuesday. But on Wednesday, price has now gone up to the resistance area, because it ran on from support on up until resistance. And because I have the daily resistance set at 72.65, when it triggered it over here in this area, I entered my call credit spread at 73. Now, yesterday, I think I said, either last night or this morning, I said I think it was this morning, I told you it closed at like 73.30 is where it closed. And I knew it was breached a little bit. It was like 73.16. I was like, okay, so just keep an eye on it on Thursday morning, which was this morning. I said, just keep an eye on it. If you got into that 73.74 trade with me, keep an eye on it. So then I left it. I put my close order on, and then this is today. Today it dropped right back down to the top of the gap. You see how my note says top of the gap? It dropped right back down to the top of the gap and hovered here. But this was enough. It brought it down enough from this resistance that I had 73. It brought it down enough for it to be worth $10. So I paid my little $10 sometime through the day. It triggered probably in this area. It triggered, and I'm out of it. But I mean, even though I got out of it, I couldn't really leave it. So I was looking to see, what would I do? I just came out of Uber. I still see there's opportunity. So I went and looked at Uber to say, what is there an opportunity to go back in Uber for, one more day? Because it is Thursday. Is there an opportunity? Well, looking here, I'm not sure if y'all can see this. Hopefully you can. Looking here, we went up and came back down right to the top of the gap. We were beneath the gap, and then it gapped up. This was from the 11th to the 12th, which was Monday to Tuesday was where it gapped up. And we're on both sides of this gap. So we're still in this zone. So I went to go to the same trade basically to say, okay, resistance is very clearly at 73 and some change, and support is here below this gap. So I went and did another iron condor for tomorrow. I entered another iron condor for tomorrow using this same area in this same zone. So that'll close up tomorrow. I think I'm at like 69 and 72 or something like that. It's somewhere around there. It's below the gap. It's on opposite sides of this gap, basically, is my support. My resistance is up here, 72, I think it is. And then I'm at 69, 68 or 69. It might be 68. I feel like it's 68 down here. What questions?
You said your resistance is where?
Above the gap.
Got it.
Yeah, above that gap. Let me see what I have there. My Uber trade is 68.69 and 72.73. I'll go back to the chart and I'll share again. 68.69, 72.73. Okay, so I can find my little writing tool now. Looky there. I miss my little writing tool in the morning. I be wanting to write sometimes on the call, and you can't be writing on there. So my trade is 72. So I'm up here 72, 73, and I'm at 68, 69, and 69 should be right in here. So I'm on opposite sides of the gap for tomorrow's expiration.
Got it. Thank you.
Mhm. Questions? So I wanted to make sure that, I think what I wanted to make sure we highlighted is the fact that we identify the trade, we identify our strikes, but now the next thing, the missing element, I believe for us, is to make sure that we're doing the alerts. So I'm gonna show you here on the chart, what would we do for alerts? Right, I'm on the Uber chart still. I'm here, I'm in the chart. You can, I believe, I don't see it up there now. I was thinking there was a way to do alerts, but I don't see it right now. So right click, I'm just gonna right click the mouse. And when I right click the mouse, scroll down, you see where it says create alerts, got a little bell next to it. Okay, so I'm right clicking, scrolling down to create alert. Create the alert. I click on that, and then the screen pops up. Let me go and erase these things that we don't need. Okay, so what I did was at or above 72.45, you can leave it like this, at or above 72.45. Then I wrote in this note here, where it says note, this is where I put call credit spread entry 73 or 74 strike. So when this alert comes through, and I have the alerts coming to my phone now, when the alerts come through, I have it on my phone as a text message, and I can scroll back and I can see, because this is what I found, if the alert is on your app, and if you're not looking directly at Thinkorswim, the alert pops up and then it goes away. Now you can go back and click another screen and see it, but if it shows up on my phone, so I can really go back to my messages and see exactly what was said, and then I see the note that says call credit spread entry and look at these prices. So then I go and check out, see which strikes I want for the trade. Yeah. On the
I
other
have a
side,
question. Oh,
yep, go
sorry.
ahead. Go ahead.
Were you also looking at the premium amount? Like I always try to get 10% of the collateral.
Oh, yeah.
So do you feel like you got a better price than
Yes.
10%?
I do,
Okay.
because when I entered the call credit spread, I got $21. And when I
Oh,
entered the put credit spread, sorry, I got $21. When I entered the call credit spread, I got $25. So
and this was a one spread?
this was a one spread, yeah.
Oh,
Yeah, so
okay.
because we were in closer proximity, I was able to get better premium. So that way, when I closed it for the 50%, like we've been talking about, I was able to keep at least 10% instead of, like you said before, like taking in $10 and you don't want to close it for 5. But if you take in 21 or 25 and then close it for 10, you're keeping 15.
Okay.
Yeah.
Okay.
Mm-hmm. So then right click here, again, I did a right click, create alert, and then like and I changed this right here where it says at or above, I changed it to at or below. And then let's say, do you want to change this to, 60, 67, 40? I mean, wherever it's near your support area, that's what you want to put in this box, something that's close to your support. But you want it to be close enough to where it's not like dead on it, so you get a chance to at least go look, right? 67.40, and then I put in here, put credit spread, entry. Let's say 65 or 66. So it's letting me know which strikes I want to look at. Now, under here, if you want to go down here, you can tell the alert, like where to send it to. If you go with notify with, it says notify with here. This is where you fill in what it says. You're going to play a sound. Do you want to bail? What do you want it to do? It lets you hear what it's going to sound like. Send an email to the specified addresses, send a text message. So I have these things set up to send I actually probably should turn off the send an email, because that right there can get on your nerves. And send push notifications to mobile devices, which to me is the same thing as text messages, but I'm leaving it because I just started the text messages and finally working right. And some of this stuff you probably don't need to have sent to you in the message, but I didn't bother any of this stuff down here. And then under options, you've got, I didn't bother any of this stuff either. Alert for reverse crossover, which probably would be good to alert that it goes back across that same line. Yeah, that might be a decent thing to have. If it crosses back across the same line, you hit it, you set that it at least alerts you again. Then it says, do you want to alert a special time, or when do you want it to expire? I don't bother either of these, okay? And then you create the alert. So that way, when the price moves across the line that you set for it, then you're going to get a message. That's going to help you with the timing of our entries, because nobody's sitting around watching, especially if you've got, I mean, our list, you know, our list can be extensive. And if you're looking at 3 or 4 of those, you're not going to sit and just stare at your computer for all 4 of these, hoping to see when it hits the strike. If you can set up the alert, then you don't have to be, you know, watching it so close, because I always say we want to enter at support when it's leaving support or leaving resistance, but then how do you put that into practice? And I feel like the alerts area is a way that we can put that into practice. Make sense? What questions? Do we have any? Yo, y'all quiet. No más preguntas. All righty. If we have nothing, then I'm going to say goodbye.
Well, all right.
I'll say goodbye. Say goodbye. Ooh-wee. Okay. Trying to see if I had anything else in here we needed to discuss.
I have a question, Alyssa.
Yeah.
When the stripes and the premium you got, did you get the same premium or something similar when you got back in? You said you sold it
yeah.
and then you got back in?
So I did the put credit spread, got $21, and then I bought it back for 10. I did a call credit spread and closed that for 10. And then I got back in today. My days this week are running all together, by the way. I got back in today with an iron condor for Uber, and I took in, this is my Uber trade. I received, I think that says trade price. Yep. I received $10 on one side and 17 on the other side. So I took in $27 total.
Oh,
So
that's good for a Thursday.
That's good for a Thursday. Yep. So I took in $27 in premiums on my Iron Condor. And currently this is worth 7. I took in 10, right? 10. And now this is worth 7. Here I took in 17. And this is worth 16. So
I
that's
like
a 6.
that.
So at this point, it's worth 23. Of course, the market will draw up some of that data now, and the current price is $70.860, 70.86, and my strikes are 68.69 and 72.73.
I feel like you need to break out and feel the fight. I see the smoke.
You see the smoke? That's not too close. It's not too close. Let me go see. What's the plus minus number? Oh my goodness, now you're like, I feel like you need to break out. So Uber, a 1.4 is what it is right now over here. It's a 1.4. So if it goes down from here 1.4, I'll be at 69. And if it goes up 1.4, I'll be at 72.
Okay. I'm like Jamie. I like to be like 80, 85. I'm tired of getting breached.
I know now that probably that's such a bad part of it. It's like I am not for that. I agree. That's definitely the drawback. Definitely the drawback. Mhm. Have you been using your 2x or 3x to get out for your stop loss?
I have, but I I did better this week in not
Mhm.
getting in too many trades, and
Okay.
nothing got close enough to get
Okay.
breached.
Okay. Cool.
So, but I've been watching it, and I'm trying to stick to the plan.
Okay. There we go. I did that last week. I closed some trade that was 3x. I was like, it's gonna be more peace of mind to just let it go. Think I
Yeah,
better let it go. Just let it go.
right.
Looks like another trade. TKO.
Um,
I knew
so
that was
but
coming.
right, last week, and I have to go back and look at my spreadsheet to see what I had one trade that went 2x, and I hopped in on the other side and made
Okay.
it an iron condor, but
Okay.
then price moved away from it moved away from my strike. So I was like,
Mhm.
oh, I didn't have to get on the other side. But
Right.
then,
And then you probably got nervous on the other side because I've done that before. Gotten on the other side and then got nervous and it was gonna go breach. Like a good trade is now gonna go bad because I'm on the other side.
I heard you say that in my head. I
Yep,
heard you
I've
say
done
it. I
that.
was like, look what I done did.
I've done it. Like it would have been okay, and now the other side is in jeopardy.
Yeah. But
Mhm.
I'm since I'm concentrating on trying to take in more premium and do less trade,
Mhm.
um, I think instead of just setting the price for 10%,
Okay.
doing the alert like you said, because I'm at work
Mhm.
and I be looking on my phone, but I can't
Yeah.
look on my phone all day.
Right.
So
Right. So yeah, I set the alert. I did that this week. So it was the first time I actually did that and then waited till it did its thing. So I did it and waited because I knew I wanted to do the iron condors. So I put in Uber, I put in PayPal, I want to say, and I put in UPS. After we talked about UPS, I think it was Sunday night. I put in UPS. UPS did trigger, it might have been yesterday, and I think I didn't like what the premiums looked like, so I left it. But the PayPal one triggered on Tuesday while I couldn't get into Thinkorswim. So that one probably would have been fine, but that one side of it triggered. So what you do is, even if we're looking at iron condors, if only one side triggers, and you work with that side until the other side triggers. And if it doesn't, then you just work the one side.
yeah, I could have got in on the other side on Amazon today, but I didn't feel froggy, so I
Yeah,
just like,
you
no,
wasn't
I'm gonna
feeling
stick with.
froggy.
I wasn't. It's like
Wasn't
this
feeling
is gonna
froggy.
be a good week. Let me not let my good
Yeah,
week go bad.
yeah. Let's not ruin my good week. I did real quick put together, I went back to the debit spread course. I don't know if anybody ever purchased the debit spread. If you did, I updated it today because I listened to the video again today and I wasn't fully satisfied that some of the things that were said in there weren't confusing. So I did I did I basically re-recorded the video. I made some changes to the slides, and I re-recorded the video today and uploaded it and put a little price tag on it. For those who already had the debit spreads, you will have access to the updated version. I'll have to send a message out to the people who bought the debit spreads course. And if not, it's $27. If you don't have the debit spreads course and you want to be able to do debit spreads, debit spreads will help you when you want to be a buyer, but you don't want to put a bunch of money on the line. And since you all have a understanding about spreads already, switching over to debit spreads won't be too much more difficult, especially if you're already doing some buying. If you're already doing some buying options, then the debit spreads little course won't really be too much more to learn.
Is that synonymous with Leaps, Alyssa?
No, Leaps goes with well, you can buy Leaps. Leaps is
Just
usually
a longer duration?
Yes, a single contract with a longer duration. You can do debit
Oh.
spreads as Leaps too, but generally this is, you can do it as Leaps. You can, absolutely.
So 2 legs for Leap, but Leaps are usually 1 leg?
Leaps are usually 1 leg. You usually buy
Gotcha.
an options contract a long way out.
Okay.
Yeah, but you can do it with a debit spread also. The only thing is when you do it with, usually we were using Leaps as something we could use and put covered calls on. If you have it as a debit spread, you can't use a covered call on it because you've already got a sale leg attached to it. So you won't be able to use it as a covered call if you're buying Leaps. I'll put the link into the chat though, into our chats for those who may be interested. I got a link that takes the majority of the money off of the price and brings it down to $27 for you. And don't forget, we are still doing start with the chart or chart your way to 100K. That is, I'm marketing it this week and we're going to start our classes on next week. We're going to start them next Thursday. That's when we'll start the classes that go along with, or the interactive sessions that go along with it. And of course, you all are welcome to do that. If you wanted to get the course though, if you want to get the course, I put a link in the chat that took $97 more off for those who are members, but that is a separate thing that was that's a purchase. It's not like me I am running a live program in that we will have the sessions on a weekly basis, and of course, as a part of the membership, you all are gonna definitely be able to come to that. But as far as purchasing the separate course, if you really want it, if you really want the course, the videos and stuff, then you'll need to purchase that with the discount code. Okay. Do we have any questions? No? All righty. Well, I'm gonna bid y'all adieu, and we'll see you in the morning. Jamie should be on the call in the morning. He's supposed to be on Fridays. Somebody tell him that he's supposed to be on Fridays.
Yeah,
Is it
somebody tell him
8:30?
that.
I know, right? Tell me that. Is the
See you in the
8:30 just
morning,
for summer?
Jamie.
No, the 8:30 staying.
Ooh, child. Okay.
I know. See, exactly.
Ooh.
I am not a morning person.
Oh my God.
That's
All
because
right.
you stay up till all hours of the night.
Okay, but
I'm
I'm not. I can't
I'm getting
confirm
off
or
the
deny that.
train. It's 7:30 where I am.
Yeah, I don't guess. Yeah, I don't. Yeah. Ooh. Mm.
My thing is, I want it to be, even though we as sellers aren't necessarily entering trades at 9:30, people are looking and doing things at 9:30 and they're distracted. I feel like if we can go through our things beforehand, you can really have yourself set and ready to do whatever it is you're gonna do at 9:30. So I wanted to make sure that I'm giving the prep work, or that there's things that we can look at ahead of time. So that way when 9:30 comes, you're ready to rock and roll. You might have decided like today that when SPY started dropping, you was ready to jump in and get some. And if I had been talking, you would have missed it.
Not quite when you've been up so early. The brain, nah.
Now, I'm an early bird though.
Yeah, I see. It's all good.
Mhm.
It's all good. I did have a question, but it wasn't so much on this as much as curious about the wheel strategy for Chipotle.
Okay, go ahead. The wheel strategy for Chipotle,
Well, because they're gonna do a 50 split.
they are. So what are you gonna do? What are you talking about doing?
Well, the question is, with the will, right, you get the shares, right?
Yeah. Mhm. If your strike is breached, you get the shares.
If my strike is breached, you get the shares.
Yeah. So now the wheel
When it comes
strategy,
to 62, I'm not trying to be in it now because we don't
okay.
got 300 plus.
I
So
was gonna say that's gonna be a lot.
right, but when it gets to like 60-ish, right?
Okay. Uh-huh.
Isn't that an opportunity to breach? And what is that? Is that I forget. So it's one contract is 100. So is that like
Yes.
60 times 100? Oh, okay.
So you would have to, let's say you had a 60 strike, you're going to need to leverage $6,000
Gotcha.
for that trade. And then it'll stay there until you'll take in your premiums, obviously. And that trade will continue to run until you close it or it gets breached. I mean, well, the breach, it'll go to expiration. You can let it go to expiration. If the price is below 60, you're going to be given or put the shares. If the price is above 60, your money will just be released to you.
What do you mean released to me? You mean taken? What you
Your
mean released?
buying power released to you. So your buying power, because if you have a 60 strike and you are putting on this wheel trade, the broker is going to block away $6,000. So once the trade is over, and if the price is above 60, the broker is going to give you, or is going to release your buying power back to you.
That's
You're
the
quiet.
premium
You don't
plus,
understand?
right? You get the premium plus. Is that what you're saying?
Not quite. Let me see. Let me write it down. That way it'll be easier for us to see. Let's put us in do some writing. Okay. So let's say you got, come on, computer. Let's say you got the 60 strike. Okay, as a put. This is going to be 60 times the 100 shares, which is $6,000 of buying power
That I need to already
reserved.
have in order to even
Yes.
execute the trade. Okay.
Yes. Okay. So this trade goes and goes and goes. At expiration, okay, at expiration, you got one or two things. Number one, if
I need to
price
have
is
it regardless of the margin.
they may use some of it in margin, but the broker's
Okay.
gonna want you to have some of it,
Okay.
right?
Okay.
The margin
Okay.
will kick in. So you're right. If you're using margin, it won't have to be all your money. But the
Okay.
broker's
Just
gonna block
curious.
away your part, its part. That's a good question. That was a very good question. So at expiration, if the price is above 60, right, then the broker gives you your $6,000 back. Basically, that's a beast, looking real wonky here. Gives you $6,000 back. If the price is, but you keep your premiums, whatever premiums you take in, you're keeping those premiums. Either way, you're keeping the premium, no matter what happens. Okay. The other thing that can happen, if the price is below 60, then you will get 100 shares. That money that the broker used that $6,000 that the broker used, they're going, the broker had, they're going to use it to buy the shares with. So you will purchase your shares. I say you will get, I'm gonna say here, you will purchase 100 shares with that money. Make sense? If not, ask away.
Where's the circle? Where the cycle thing happens?
So once you have the shares, then you can start to sell covered calls. That's when the cycle starts. You have to have the shares. Well, you're starting with the selling the puts. And then when you
Oh.
have the 100 shares, you can now
Yeah.
do covered calls.
So I could take 10 of the shares and do a cover call, which
No,
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 you gotta do
no,
all 100.
100.
Ooh,
All
child.
100. Covered calls is in boxes of 100, just like a regular options contract. It's in sets of 100.
Mm.
So this 100 shares that you collected when you bought them, you can then do one covered call.
Hmm. So it's really not
Mhm.
my shares to do with what I want with.
Well, it is. You can let them sit in your portfolio and grow, or you can or do covered calls with them. Even if you're doing covered calls, they're still yours. You can close the covered call anytime and make sure your shares are safe.
Okay, and with the covered call, I'm buying,
Selling.
right? Oh, the covered call I'm selling?
Yep, you're selling almost like a call credit spread, but you're selling a call and you're using where on our call credit spreads, we have a buy contract and a sell contract. When we're selling covered calls, the buy part is the 100 shares. And then you sell the 100, you sell the covered call against that 100. That gives you the two legs, basically. One leg is the 100 shares, the other leg is the sale contract. It works just like a call credit spread.
Okay.
Okay.
Okay, I'll call credit spread. All right.
Mhm. If you want more information about, and it's a pretty quick video, if you search inside of our Telegram, if you search covered calls, you should be able to find a relatively short video that will talk about it more in detail.
Mm-hmm. Cover calls. All right.
Okay, covered calls and selling puts. I mean, both of those areas will be discussed. I think we also did it. I know we did in our options 411 live coaching.
Right.
One week was covered calls and 1 week was cash secure puts.
Yeah, I was looking for it. Okay.
Yep. You should be able to do a search. I want to say it's probably session 3 or 4, maybe session 4, somewhere in there. 4 and 5, maybe covered calls and cash secure puts. So if you search session 4 or session 5, you may find what you're looking for.
Okay.
Okay. Preguntas? There's so many ways to make money in the stock market that you have to, you pick a few. So we want to have as many tools in our bag as we possibly can. That's important to us. But you also want to be comfortable using the tools that you have. Right? Okay. Well, all right, everyone. I'll see y'all in the morning at 8:30, bright and early, Janae and Tanya and Jamie.
I'll be there. I'll be there.
I'll be there. All right. Be there. Be there. You got one eye open.
Yeah.
You showed up this morning a little late.
Girl.
We'll
Yeah.
see you in the morning, Janae.
Well,
Yeah.
actually, tomorrow's a day off. Tomorrow's a day off. so and I don't plan on trading. So I think I may sit this one out.
Okay.
Okay, alrighty.
That's a good way to play that. Yeah.
Yeah.
For real. Okay. You know.
Your phone number?
Hey, Lisa, I'm still at the salon. That's why I was trying to listen in, but I got in as much as I could. I'm still at the salon. That's why.
Okay,
I like that one.
okay, no problem. I know you're making people pretty.
Yeah. All right.
All right, honey. We'll talk later, everybody. I'm only up because I have to get ready for work. You going to work at night, Karen? Oh, you getting up in the morning? You mean you're only up in the morning to go to work? Yep, I get it. All righty. Well, I roll out of bed, I read my scriptures, and then I start moving around like, I guess I should put on a shirt and make sure I look presentable, come out there and get all my stuff ready. So when I click to the next screen, something's actually there, even though my computer's been working so hard. Working so
Mm.
hard. All right, y'all.
All right.
I'll see y'all in the morning.
Y'all stay green. Y'all get
Stay
this
green
money.
and get this money. Bye, girl.
Good night.
Oh, wait.
Right.